The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We will have Rich Anderson on at the break, and we're going to go extensively over some of these reports that come out, which ones are important and which ones aren't. And we're also going to be talking about the weather market that we're looking at in the grains, with corn above substantially above $5, wheat approaching $7, and beans in the teens, almost at $15. They might have hit it last night. Anyway, those are the things we're looking at. I posted the chart of the German DAX on the daily. You'll see that big yellow 3-drive to a top pattern. To me, that's very bearish. And if you look at the 60-minute chart, you can see it confirms it. We had a Gartley pattern form yesterday, right up at the 1,450 level, and that tells it it's probably going to go down to around 137, and that would be a place where it should be good support. That'll be a 78% retracement of the low on the 5th of January. And so that's what we're watching here in the German DAX. That's pretty clear. It's a pretty same thing that we're seeing in the S&P, folks. Yesterday it missed our stop by 2 points. I thought it was an aberration, but at least we're still in it. Keep your stop running at 38.20. And I got to give it a little room here, because if it's good, it's going to be a really good one. And if it's not, then it won't be. Now, the German DAX was bullish, but if we take a look here at the FTSE, let's get this up here. Just take me a second here, boys and girls. Just bear with me here. You'll see this is the FTSE on a daily chart. Whereas the DAX went up and made a 3-drive to a top pattern, the FTSE could only make it just a tad above the 61% retracement up there at 707. And there's the ABCD. You can see the small 3-drive to a top pattern from November. That's the green triangles that you're looking at right here. So that tells you that that is probably a negative pattern and heading down. And so far this morning, it has been heading down a little bit. Now, regarding the news, folks, I don't really look at the news very much. Let's look at the FTSE here on the shorter term basis before we get into the news, because that is a quagmire in itself. You see the big ABCD up at the 1.618 expansion, then the market's still heading down, it looks like. But that's what it looks like on both the German DAX and the FTSE. Those are starting to look lower. We're looking at pretty much the same thing that we're seeing in the S&P. We've been up at this 138.20 level 3 times now. It hasn't, been able to power through, and that usually tells us that we're probably getting ready for some type of a rally. It might be short term, but we don't know. Folks, the news follows the trend. I mean, usually that's what the case is. History has said that's the case. But there are times when you get markets that just go absolutely crazy. Like, cryptocurrencies, it's relatively new, 10 years old or so. But we have markets that are in weather markets like we have in the grains. Those are the most difficult to trade because they are so explosive. And the reason why that is that the crop has already been harvested, and it has been sold, folks. The problem is there's just not much out there to buy. So a person has to, buy up for it. See, they didn't build inventories when they were really low in price during harvest time. They should have been able to, buy low. And, it was down there. My gosh, Mr. Z was screaming about it. I was screaming about it, saying these are really, really low prices when we had corn down there at 300 or something, 310, 320. I mean, it was nothing. Now we're trading at 530. And this is telling you that there's just not out there, and so it's starting to run. Now, what'll happen is one day, and I don't know when it'll be, it'll abruptly change trend, and it might be related to the weather. It could be some type of a news announcement, but when that happens, that's what you want to see, because the shorts are, they're basically mid-massacred, and there's still shorts out there. because for every buyer, there's got to be a seller. So there's still shorts that have not covered. And most of the time, those will be farmers that are already hedged. In other words, they've sold their crop against that. And so they can't make any money from where they are right now, but they're still holding grain to sell against that position. So we'll have to see if that comes in someday. We'll look at it a little bit later. So let's pay very, very close attention to it. Now, I wanted to spend just a tiny bit of time here talking about Bitcoin. We'll get it up here, and you'll be. Oh, maybe we got a caller in here. Let me see. Mr. Z's asking us coffee. Okay, we can look at the coffee. You betcha, pal. Let's just do this Bitcoin, and then we'll do the coffee. And you were bullish that, as I believe we were down at 119. Wasn't that the buy part of coffee, I think? Anyway, you'll see Bitcoin here. We had a high of 42. We came down to 31. We rallied up to 40. We're trading at 35, 37. The ABCD on that, folks, comes in at right at 2,900. So watch Bitcoin if it gets to 2,900. That's going to be a retest of the 382, and it's also going to be a place where you'll be able to look at it from, that's not going to work. Just a second. I got to get an update on this, Mr. Z. Just take me a little bit of time to get the old Mr. Joe up here for you. There it comes. Hold on here. Yeah, we're moving here. Let me update this here for a second. And we'll go here. By the way, they are giving us the vaccine here this week here in Tucson. They are, hold on just a second. We'll move up here. Yep, that was a really good. Let me, just a second, Z. Just a second, my friend. I don't know what happened here. Did coffee have a big gap up today? My gosh, it did. What happened, Mr. Z? Did the weather get bad in coffee too? Yeah, the buy, the ABCD, it's not a buy for me, S&P. See, let me ask you a question, Z. We gapped up 5 cents in coffee. That's a huge gap for coffee. Is it weather related too? Z would be able to tell us. Anyway, Mr. Bill's. Okay, anyway, you can see we went right down to that 119 level. 120 was the low. We hit 119 was the exact low at the 78% level. ABCD there is. I don't know why there's such a big gap in coffee, folks. It's got to be weather related, or I don't know. Maybe China has come in and bought a lot of coffee. They blame everything on China, so we might as well blame this on China. But it has gapped up, and that gaps up. We're already through the 78% level again, so that gives us a target of 136. It looks like you're looking at 170. 7 points higher in coffee is what it looks like. If you want your cup of joe, you better get it now. So that's what we're watching here so far this morning, and we'll see whether that's going to be the case or not. But that is a big gap up in coffee. I don't know why it doesn't show. Mr. Z's not saying why there's a big gap, and Mr. Z knows everything. Maybe he'll be kind enough to type that into the room and let us know what's going on. We're going to have Rich Anderson on here in 16 minutes.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we'll talk about the gold market here. I sent out a video on this last night. Early, must have been about 9 o'clock New York time. You'll notice that we had the yellow Gartley pattern form up there at 1950. From that level, we broke down all the way to 1767. From there, we rallied up almost $200 to 1950. That was a double ABCD. You can see the three drive to a top pattern on that way up. You can see the ABCD and the red thunderbolt there is the last part of that. That took you to just about exactly the 61% retracement from the high of 2060 way back on August the 11th. That sets up, folks, if it's right, and if it is, we're going to see something really dramatic to the downside here in the gold. And the reason why I say that is if you'll look at those two red boxes that I have marked in red, and then I have another one in January, these are very, very similar, folks. You'll notice the bottom in the first box, we rallied up 6 days, around $30 or $40, and then boom. And we're doing the same thing now. Today's the 6th day, so we should start down in gold now. And if we're correct, the ABCD on this goes all the way down to just about 1,600, which is the 61% retracement of the whole thing. Now, you think that's a lot. But actually, if you look at the high at 2060 up there and you figure you get down to 1,600, roughly somewhere in that ballpark. I'm not sure exactly the number because it's going to give you a better idea, but that's the, it's right at the 78% level. 61% retracement is 1,700. That might even be a better one. Actually, we'll have to wait and see. But the ABCD measures a little bit below the 618 and a little right above the 786. So I'm waiting to see what happens. But we should be making a very good bottom here. The reason why the $400 is not that important is it's not even 382 of the high that we made up at 20,000. So that's very close, but that's pretty much, because 38% of 2,000, that's going to be pretty much spot on at 1,600. So we have to pay close attention to that. And not only that, I have to look at that on the weekly, because see, 1,600. Well, anyway, this is what I think is. I think gold's getting ready to break to the downside. Whether that's going to be the case or not, I'm absolutely not sure, but, we'll take a look at it. If you have any questions, folks, it's 877-927-6648, and then we'll be looking at that. Larry, from the live demo, would we have expected a 1-3 bottom continue in the upside in coffee? I don't really trade coffee, Bo, so I don't really know. But it looks bullish now. Yes, it certainly does. But the bottom there at the 119 level that Mr. Z pointed out about 6 or 7 days ago, that was a perfect Gartley at a 61% retracement. That's a pretty big one. So we'll see whether that's going to be a question. Well, I hope that helps. Did it answer the question, Bo? Please, because if you haven't got the answer, I will be happy to try to give it to you. So that's what we're keeping an eye on. Anyway, we'll see. Okay, let's move on here, and I wanted to cover a couple other things before we get to Rich Anderson, who will be coming up at the break. The main thing was that gold market, and I think it's got a real chance of doing that. And I'll bring up the ABCD here so you can see this that I was talking about here in the gold, and I'm not sure if that's what we're looking at. Now, I think Bo was asking if that was a 135 in the gold. It is not. The reason why is there's no symmetry between 3 and 5 at all. So you have to have the symmetry between 3 and 5 and 1 and 5, and that's not it. That pattern that we're looking at is nothing more than the big ABCD pattern that takes us to the magic number of 1633. So we'll see if that's going to be the case. We'll watch that. If it happens, well, the first thing for it to get to happen is we got to get through 1810. And my guess is, I don't think it'll be today, but you never know. Natural gas. I have time to pull up the coffee chart again. Sure, just give me a second and we'll talk about that, because folks that are not interested in calling in with questions, we are going to take care of the people that actually do that. So give me 1 second. I just got to get the old KC up here again. This should do it. Whoa, it's trading at 131. Oh, it updated. That's what it was. I have delayed data in coffee and cocoa and stuff, folks. I don't trade those things. And I probably should, but I don't. And I made a promise to myself never to trade them again. And, folks, I never have. I think I put one cocoa trade on once. It worked pretty good. But I have a bad taste in my mouth about coffee, cocoa. Even sugar is real easy to trade. Okay, you're looking here at the coffee. We've broken out, see, substantially above that, because the last time I looked at that, we were trading at, 130, 129 and change, and now we're 130, 170. So it's moving pretty fast this morning. Now, let me ask a question for Mr. Bo. Does Mr. Bo have a question? See, the 135 March, April, May, what I have expected, 135. April, May. Okay, April, May. Yes, the April, May was a perfect 135 pattern. You can see that February, April, May. Just absolutely perfect on number 5 there. And it got a good rally. It rallied from 104 up to 113, 900 points. But then, boom, down she came. And that was a 135 on the downside, too. So that your profit objective would have been right around 113. Then the bottom came in. We stayed there for a solid 2 months during May and July, and then up she goes, and we are on our way in coffee. So that's what it looks like. Let's take a quick look at the weekly in coffee just for kicks and giggles. Whoa, we got something here that might be interesting here. Just a second here. This is something that I had on the watch line, but I'm going to have to start looking at that stuff here. Folks, I look at it, I just don't trade it. You'll see the big ABCD here says we got a shot at 152 here in coffee, and that's not out of the realm, folks. That's just a double ABCD pattern, just right at the 61% retracement between 151. We needed to get some water. Hold on 1 second here. Hey, thank you for all the great ideas for allergies, because boy, they're going to be coming up here pretty soon. So I have to take eye of newt, toe of frog, and we'll see how it works on some of these things, but that's what we're seeing here this morning. Okay, coffee looks higher. Let me do one other thing just to be sure, because you can see here that coffee has got, if you take a look at the monthly, and boy, this is a hell of a chart. Look at this. Look at that. We're trading. We got as low as 92 or something. We're trading at 131. The high in coffee was 300. Hit it twice. So that's a big deal. Got to pay attention to that one, I guess. But frankly, I'm not watching it that much, and I probably will. But so many other things happening, can't do it all. Stay tuned for Rich Anderson.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have Rich Anderson from Anderson Capital Management on the line. Rich, we have a weather market in full bloom in those grains, don't we?
Yes, we do. And, the report on Tuesday was a shocker. If you're in the business of, feeding animals or making cereal, you've got to make sure that you have your supplies. And that's not just true here. It's true all over. Russia, Ukraine, they're getting real pushback from their citizens that the prices of food have gotten higher, and so they're limiting their exports. About half the time I think that the Russians say they're going to limit something just to get the prices pushed up a little bit, and then they change their mind. But you never can tell. But there's major changes that have occurred in our balance sheets, and all that is that's our margin for error, and that margin for error has been erased. I mean, last summer we were looking at 2.7 billion carryover in corn, and now we're down under 1.6 billion, and pipelines maybe 1.4. And a lot of in the trade, the commercial guys that actually trade this stuff think it could be closer to 1.3.
Wow.
The margin for error is gone. We have weather problems in Brazil. Our crops, who knows? We're going to need to add acres. Last year we planted 218 million acres. We're going to need to add acres of corn and beans, and then, plan on having a decent crop here, which the United States has been pretty good at in the last 10, 15 years. We haven't had too many major problems. Although the derecho last year, these heavy winds, something I'd never even seen before, that was a major setback. In China, they had that one rainfall that was south of the Yangtze River, was up to 30 inches. I mean, that blew away a lot of their crops. It's all over the world, and things are tight now, and governments cannot afford to let the price of their food get out of hand, so they're protecting their supplies first. And it's going to make things interesting.
Wow. Rich, you remember years ago there was always that statement saying we're only 1 year away from a worldwide drought. I've always remembered that. I don't remember who it was that talked about it. It was somebody at Conti Commodity. It might have been either Ivan Auer or one of those other guys, those fundamental guys. But he said, it's always dangerous because if we had a drought here in our country, then because we supply so much of the world, and this was 30 years ago. So if we had a drought now, this would make this COVID-19 look like child's play because people have to eat. And
I know.
This is very, very dangerous with this weather report that we're having now, because if it comes back at something, and usually they come in ones or twos or something like that. Rich, do you remember, I used to talk about Paul Samuelson, always talk about soybeans. He said because it had an inelastic demand, it didn't make any difference what the price was, you had to use it. And that's, butter and all or synthetic butter and cooking oil and all that stuff, meal and cereal, all that stuff comes from the soybeans. And so they could go to $25, couldn't they?
Well, analysts I highly regard, I heard yesterday say, he's been asked the question lately, what would happen to prices if we had a severe crop problem this year in 2021? And he said he wasn't forecasting it, but if we had a severe crop problem, you could see beans go 16 to 20, you could see corn go 10 to 12. And let me add that in China right now, our corn is the cheapest corn in the world. China right now, corn prices are $11 a bushel.
Holy cow.
But their prices are always higher for a variety of governmental reasons, et cetera. But so you need to use discipline. You need to control your risk because prices can go kind of beyond our imagination. Now, we'll have in the third week of February, the USDA will have their, it'll be a Zoom meeting in Washington, D.C. this year rather than a live one, where they'll forecast and give their 21, 22 balance tables. But keep in mind, last summer, the USDA's balance table was 2.7 billion excess corn, and now we're under 1.6. Wow. So these things, are always dependent upon how things go, how we get the crop planted, how the weather is. And they'll be talking about planting more acres. But if you look back to the high prices of 2012 to 2014, since we planted 218 million acres last year and we need more corn and beans, they'll take some of the prevent plants and try and get it back into production again. In 2014 to 2012, in between those years, we had 228 million to 231 million. So we'll find more acres to plant this year, but those are marginal acres, and they may or may not be successfully planted, and what their production will probably be less.
Okay, we got a caller from New Buffalo, Michigan. Gary, are you there?
Yeah, I am, Larry, and thank you. I'm a huge fan and a 24/7 member, and Rich, I'm a Scandinavian too, and I'm a big fan of yours. Listen, real quick, you just mentioned that Zoom meeting. Is that Zoom meeting going to be able to be posted and open to all of us as the public to join
you probably have to go to USDA.gov to look that information up. I don't have that information for you. If I find out something about it, I'll give it to Larry, and he can put it wherever he puts his information.
Great. Here's my question, because I don't want to take away from...
I don't put anything up for anybody, but by the way, one of the ways you can structure a trade to limit your risk, like before a report, is to do a reverse ratio spread. People do ratio spreads where they'll buy one and they'll sell two further out, and they'll get a credit. A reverse ratio spread is where you buy one and sell two, but the one you sell is closer, and you're paying. You know that the most you can risk is what the debit is, and in these kinds of markets where you have crop reports that can surprise and stuff like that. I mean, yesterday was exports, the largest export since May of 19 for corn. You got to control your risk. That's the essence. Control your risk and trust what you see on the charts rather than what you're thinking, because every now and then you hear stories, and then all of a sudden the story doesn't, verify. It doesn't realize. Whether it be the Russians decide that, I guess we don't need to control our exports for wheat. Right now they're in the control your exports for wheat. But, that's 1 week, and then next week it's another thing. The Argentines canceled all exports, and then the next week they were 30,000 a day, and now they forget about it. So these things are constantly changing. Just look at the chart.
Yeah.
That's my opinion.
Gary, did you have another question?
Yeah. My main question was this. So Tom put me on to the potash stock and IPI, and then also, of course, his Mosaic that he's big on for. And so they ran quite a bit in 2010. I mean, huge. 11. I'm curious, what made them run so high and so hot then? And are the conditions similar now in a positive or negative way? And what caused them to actually go bad?
All right, we'll answer that question when we get back.
Thank you very much.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back. We're talking with Gary out of Michigan with Rich Anderson. Do you want to continue on, Gary?
No, I hope it came through. I know the break. I apologize about talking over that.
No, that's fine.
The question has to do with potash and mosaic and weather conditions are similar with its prices back in 2010 and 11 when those stocks took up. Is that not correct, Gary?
And also what then caused them to then go back down to this historic low, kind of where they just come bottomed and coming back from now. Thank you.
I would say that the conditions are relatively similar. I mean, I'm a farmer from South Dakota. That's really where I grew up and how I got started. And farmers tend to use more fertilizers, potash, the stuff Mosaic sells, when the prices are good. The farming changed when we had crop insurance. Crop insurance is set with the prices in February, and then again the prices later in the fall. But this year in February, our price is going to be a whole lot better than the average price was a year ago, so their insurance will be better. Therefore, they'll be more willing to spend money. I look at another indicator, the July D's corn inversion that we have. July D's corn was 75 cents premium to the D's yesterday. The only times it's been like that were like back in 2011 and 2012. You know, in 2010 is when the corn prices really started to take off. They went from in 2010, we went from 324 on up. By 2011, we were at the high of 799. And then eventually we got to 846 in July of 2012. So you can see how things can change rapidly, and we've taken away the margin for error. Farmers know this. They're going to, they're going to have a margin for error because their crop insurance will be better. Therefore, they'll be spending more money, I believe, on these fertilizers that will enhance yield. And as I mentioned earlier, they're going to be planting more acres because it's profitable. And when you can ensure your profitability, that at least if things fail, you won't lose a bunch of money because you've got the crop insurance. They're going to plant more acres this year. Therefore, they're going to use more of those products. I don't make any recommendations, but I believe the conditions are similar, yes. And those are the reasons why.
Thank you very much. That answers a lot. Be well, both of you. Thank you.
Thank you. Thanks for calling in, Gary. It's a perfect example of why Rich does so much reading. Boy, Rich, you got so much that is involved with this that it's just, it's absolutely, truly amazing to me. Now, we've had a question, Rich, from one of our listeners. I'm going to post it again because it's about the types of reports that we have all the time. And there was a 7, we'll get these up here so we can see them really clearly. I'll blow it up a little bit. But you'll notice here we've got a whole bunch of them here, starting out with the hogs, and rank these between 1 and 5, 5 being the most important, 1 being very little, okay?
Okay.
But the first one is hogs and pigs quarterly.
Quarterly, the longer the report, the more important it is. Hogs and pig report, that's a big report. You need to pay attention to that.
Okay.
The problem is that it doesn't often have a surprise. You can have a surprise, but it doesn't often have a surprise.
How about the livestock slaughter monthly?
Those numbers are reported every day by the USDA, so that the chances for the traders watch that, but there's not likely to be a major surprise there because they're following the reported stuff every day, and therefore that's why you don't get the major surprise.
And how about the cattle on feed monthly?
There can be some surprises there. I'm always watching for those. There haven't been lately, but there can be. And frankly, the cattle on feed numbers are going to be impacted. And I think you'll see a surprise in one of these coming reports because the price of corn has moved and changed dramatically. And the potential for the price of corn to change dramatically is going to be with us. And so that's going to make feeders a little more hesitant because of profitability risks that they're going to have.
Okay, now cattle, semi-annual report on cattle.
That's because it's semi-annual. It's a big number, but it usually doesn't. It doesn't usually have a major impact on the market for more than a day or so. It's just too big a number. It's too constant. It doesn't change that much. 0.5% or something.
Here's one I've not seen before. United States and Canadian cattle and United States and Canadian hogs. I've never even seen those reports before.
I've watched those, and there are times when we're bringing more stuff into the U.S. from Canada or when we're shipping stuff into Canada, but they're not market impacts for more than, half hour to an hour. It's a long-term thing. It doesn't have a lot of impact.
How about the livestock slaughter annual reports? Is that important?
Well, it's important, but it's not a market mover like, changing the balance sheet by, 10 or 15%. These things are slow-moving things. It's like there's like turning an aircraft carrier. They're slow-moving, and it gives you a trend. I think one of the most important things a person can think about is that when things start to develop, reports trend like the market trends. We have a couple of bullish reports. The next report's probably going to trend in the same direction, a friendly report. Yeah. And then there'll come a time when reports start to be negative and the trends change. And that's, in a bigger picture, that's what you look for in whatever market you're following. At least that's what I've noticed over my 45 or 6 years.
Yeah, wow. Hard to believe it's been that long, right, Bubba? I met you when you first got started, for God's sake. Hey, listen, thanks for joining us, Rich, and we really appreciate it. And how's your weather? You still getting about 6 above zero for your high of the day?
Hey, I actually 2 days ago we had 40-degree weather, and I actually saw people walking their dogs in shorts. But,
oh my goodness!
We're going to get some snow here, 6 to 10 inches, which snow's moisture. We could always use that. And then there's a polar vortex that's slipping down from the North Pole that's going to bring a little cold. But it's been above normal all year long, or all January and good part of December. So we've had it easy. Whenever you've had it easy, you're going to get some cold to even it out.
Yeah. Hey, we've got one other question here from Mr. Z about the breakout we're having in Kansas City wheat, breaking out of a 6-year base. Does wheat look as bullish as the corn and the beans?
Chart-wise, probably the answer to that question is yes. there's some real tightness now. If I was going to take a look at one market, I'd probably be looking at the Minneapolis because it's been the unwanted cousin. But I expect that there'll be less acres of Minneapolis wheat planted in the spring because they're going to be planting more acres of corn and beans. And those, that acre can be planted to one of three things. They're going to do corn or beans because it's more profitable than the spring wheat. So the spring wheat acres will go down, and I think that's what you might look at.
Hey, great, Rich. Thank you very much, buddy. We'll talk to you soon. Rich Anderson,
All right,
folks. You bet. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to mention, we've had this nice little rally going here for the last few days in the foreign currencies. The U.S. dollar has been rallying against the foreign currencies, and we should continue this trend a little bit lower, I think, because that number down there at that AABCD, that 85, I believe, was a very, very important number in the dollar index. It might have been 89. It was 89 in the dollar index. So let's see if we have a question coming in. Can you put the chart up? Whoa, it's going to take me a second, but yes, give me a second here, and we'll get it right up. There we go. Get the old dollar index up. We're having a pretty nice rally here, like we thought, and It's not that great a rally, but yeah, that number was 89. It wasn't 84. But let's get this up here to take a quick look at it. I want to draw this in so you can see it clearly, folks, because it was a really nice little 3-drive pattern with the usual suspects right on the money. Get it up here. Here we go. And you'll see here that we are right in an area now. We're at the 78% level of the high that we made back in the 21st, and we're at the 61%. Well, we're actually above the 61% retracement of the high on December the 7th. So it looks like we're going to go at least to 90.75 on this run here. We're at 90.56 right now. This is the 4th day of the run, so starting at the middle of the week next week, we probably have some type of a counter trend change here where you might be able to get short the euro or the dollar at or the euro or the British pound at certain areas. We believe the British pound at that 137 level was really very important, folks. We dropped down to 136 today, and that's telling us that, yeah, these things do have legs to the upside. And I'll be watching the grains, folks, because when we have weather markets like this, they have some great patterns because there's so much emotionalism like we're seeing in all the other things. And I expect volatility to start increasing very heavily quickly in the stock market. We're due for a really sharp short-term correction. Whether this will be a major high or not, we won't know for a couple months, but it's worth looking at. 877-927-6648.